You paid taxes on your paycheck, your entire working life. Every 2 weeks, the government took its cut before you ever saw the money. Then they took a piece for Social Security. For 40 years, you paid in. And now that you are finally retired and that Social Security check comes back to you, the government taxes it a second time. The same money, taxed twice. Most people over 65 have no idea that this is even happening to them. They just see a smaller check than the letter promised, and they assume that is simply how it works. It is not how it has to work. Because right now, sitting in Congress is a bill with a name, so plain it almost sounds made up. You earned it, you keep it. 4 words. And if it becomes law, the federal government would stop taxing your Social Security check. Not a smaller tax, no tax, zero. For tens of millions of retirees, that is hundreds, sometimes thousands of dollars a year back in your pocket. Now, I am going to be honest with you, in a way most channels will not be. This bill has not passed. I am not here to tell you a check is coming next month. I am here to tell you exactly what is written on that page, why your Social Security is being taxed in the first place, and the one thing that actually decides whether a bill like this lives or dies. Because here is the part nobody explains. Bills like this do not fail because the idea is unpopular. They fail because most of the people they would help never even find out the bill exists until it is already dead. Today, that changes. My name is Kevin. I read this bill so you would not have to. Let me walk you through all of it in plain English. If you are new here, this channel exists for one reason. We read the laws and the bills that decide what happens to your money, whether they already passed or are still sitting on a desk in Washington. Subscribe and turn on the bell, because this one could put money back in your pocket. Now, you have probably heard a version of this promise before. No tax on Social Security. It got said a lot during the last election, from more than one direction. And here is the honest truth about that. A small piece of it did happen. We will get to that. But the full idea, the one that actually ends the tax on your Social Security, is still sitting in this bill, waiting. Not done, not dead, waiting. So let me show you what the real thing actually says instead of a campaign slogan. Now let me start with the thing that makes people angry once they finally understand it. Why is Social Security taxed at all? For the first 45 years of Social Security, it was never taxed, not $1. Then, in 1983, Congress changed that. They passed a rule that said, if your income climbs above a certain line, then part of your Social Security becomes taxable. Verified card. Source, Social Security Administration, ssa.gov. At first, it only hit the highest earning retirees, a small group. Then, 10 years later, in 1993, Congress went further. They added a second layer. For retirees, a little higher up, they said, as much as 85% of your Social Security can be taxed. Verified card. Source, Social Security Administration, ssa.gov. 2 tiers, both stacked on top of retirees. But here is the trap, built into that rule. The income lines they drew in 1983 were never adjusted for inflation, not once, in over 40 years. Let me tell you what that means. The line for a single person is $25,000. For a married couple, $32,000. Verified card. Source, Internal Revenue Service, irs.gov. Those numbers were set in 1983, and they have never moved. Think about that. A gallon of gas in 1983 cost about $1. A new home cost around $70,000. Everything in your life has gone up since then, except those 2 lines. So a rule that was written to tax only the wealthy now reaches down and taxes a retired school teacher, a retired mechanic, a widow, living on a pension, and a Social Security check. The line never moved, but inflation pushed almost everyone over it. That is not an accident. That is a tax increase that happens automatically every single year without Congress ever having to vote on it again. Now let me show you how to find out if this is happening to you, because most people have no idea they are even in this zone. Grab a pen. Take your yearly income from everything except Social Security, your pension, your retirement withdrawals, any interest or work. Now, add half of your yearly Social Security on top of that. That total is the number the government looks at. If you are single and that number is over $25,000, part of your Social Security is being taxed. If you are married, the line is $32,000. Verified card. Source, Internal Revenue Service, irs.gov. Look at those lines again. 25,000, 32,000. A single person with a small pension clears that almost instantly. That is how a rule for the wealthy became a rule for almost everyone. And this is not a small group. Around 40% of everyone collecting Social Security today pays this tax on part of their benefit. Verified card. Source, Social Security Administration, ssa.gov. Tens of millions of retirees, most of them with no idea it traces back to two numbers frozen in 1983. Let me show you how this actually lands on a real household. Let me tell you about Ellis and Darlene. Ellis is 70. Darlene is 68. They live outside Springfield, Missouri. Ellis drove a delivery route for 36 years. Darlene worked at a doctor's office, keeping the books. They saved. They were careful. Today they have a small pension, a modest amount in a retirement account, and their 2 Social Security checks. Nothing fancy, squarely middle class. And every year, when they do their taxes, they are shocked all over again that a chunk of their Social Security gets counted as taxable income, because their combined income sits above that 1983 line. Up to 85% of their Social Security is taxable. Verified card. Source, Internal Revenue Service, irs.gov. Not 85% taxed away. 85% of it gets added to their taxable income and taxed at their regular rate. For Ellis and Darlene, that works out to around $2,000 in federal tax on money they already paid Social Security taxes on back when they earned it. $2,000 a year. That is a furnace repair. That is their car insurance. That is a month of groceries with some left over. Gone. To a tax on a benefit they spent 40 years paying into. And here is what stings the most for Ellis. He did the math himself one night at the kitchen table. Every dollar in that Social Security check came from a paycheck that was already taxed the day he earned it, 40 years ago. So this is the government reaching into the same dollar a second time. Once when he made it, again when it comes home. Under this bill, that $2,000 stays with Ellis and Darlene every year for the rest of their lives. Now, I have already handed you a lot. The 1983 rule, the frozen income lines, the provisional income math, the 85%. Nobody holds all of that from a single video. I would not either. And that is exactly why I put together the Quiet Rules. It is not a book you read on the couch. It is the drawer version of everything I explain on this channel. Plain English, large print, the exact income lines, the way the tax is calculated, the steps to lower it where the law allows. Written down so you are not scrubbing back through a video with a pencil trying to remember a number. Because whether this bill passes or not, the families who protect the most money are the ones who understood the rules before they needed them. Get your copy. The link is in the description below, or scan the QR code on your screen right now. It is also in the pinned comment. 7-day guarantee, always. If it does not give you something you did not have before, you pay nothing. Now, back to the bill, because the next question is the one that decides everything. If you cut this tax, how do you pay for it? A bill that only spends money goes nowhere. And this is where this bill does something clever. Right now, Social Security taxes only apply to the first $170-some thousand a person earns in a year.
Source: Social Security Administration. Verify current wage base.
After that, every extra dollar a high earner makes is not taxed for Social Security at all. So a person earning millions stops paying into Social Security sometime in February, while the janitor who cleans their building pays in on every single dollar all year long. Think about how backwards that is. The less you make, the larger the share of your income that pays into the system. The more you make, the smaller the share. This bill closes part of that gap. It says, wages above $250,000 start paying in again. Verified card. Source: You Earned It, You Keep It Act. Congress.gov. Verify bill number. So the very high earners who currently stop paying in the winter would pay in on more of their income. And notice, this does not touch the retiree or the worker earning a normal wage. If you make under $250,000, nothing about what you pay changes at all. That money is what funds cutting the tax on everyone else's benefit. Now here is the part that surprised even me. You would think cutting a tax would weaken Social Security, drain the fund. But because of how this bill is paid for, the analysis showed it would actually extend how long Social Security stays solvent, by years. Verified card. Source: Social Security Actuary Analysis. Verify current. Read that again. A bill that cuts your tax and makes the whole system last longer. Think about why that matters to you. For years, you have heard the warnings. Social Security is running out. The fund will not last. Those headlines scare retirees every single year. And here is a bill that takes a tax off your check and pushes that warning further down the road at the same time. That is not the usual trade-off in Washington. That is why this idea keeps coming back session after session. Now let me be fair about who this helps, because I will not pretend it is everyone. If your only income is Social Security and it is modest, you may already pay little or no tax on it. This bill would not change much for you. And the very wealthy would actually pay a bit more because of how it is funded. The people this helps the most are squarely in the middle. Retirees with a pension or a retirement account and 2 Social Security checks whose income crossed that frozen line years ago without them ever realizing it. If that sounds like your household, this bill was written for you. And if this is the first time anyone has explained why your own Social Security is being taxed, do me one favor, subscribe and turn on the bell, because this channel follows these rules, whether they are already law or still sitting in a committee room waiting for enough people to notice. You will want to be here for the next one. Let me show you one more person, because this tax hits one group harder than anyone: widows and widowers. Let me tell you about Fern. Fern is 76. She lives near Dubuque, Iowa. Her husband passed 4 years ago. When he was alive, they filed their taxes as a married couple. That gave them the higher income line before the tax kicked in. The day her husband died, Fern became a single filer, and the single line is far lower than the married one. Same pension, same accounts, less Social Security than when there were 2 of them, and yet more of her benefit became taxable almost overnight. Here is why. When her husband was alive, their income was measured against the married line, $32,000. The day she became single, that line dropped to $25,000. Lower line, same income, more of it exposed to the tax. Fern did not get richer. She lost her husband, and the tax code treated that loss as a reason to tax more of what she had left. This bill would erase that tax for Fern entirely. For a widow, counting every dollar, that is not small. That is the difference between comfortable and careful for the rest of her life. Now let me be completely honest with you, because I promised I would not oversell this. This bill has not passed. Versions of it have been introduced before and have not become law. I am not telling you that to discourage you. I am telling you because the honest version of this story is more useful to you than the exciting one. And there is something real that already happened that connects to this. Just recently, a new law did create an extra deduction for people 65 and older, up to $6,000 each. Verified card. Source: One Big Beautiful Bill Act, Section 70,103. It is real. It is in effect now. But it is a smaller, temporary version of what this bill tries to make permanent and total. And that deduction is scheduled to expire after 2028. So the fight over whether your Social Security gets taxed is not some far-off someday question. It is happening right now. And here is something you can use, whether this bill passes or not. Because there are legal ways to lower how much of your Social Security gets taxed, using rules that already exist. Remember the number we calculated earlier? Your other income plus half your Social Security. Anything that lowers that number lowers your tax. So, for example, money in a Roth account does not count in that formula at all. Every dollar you live on from a Roth instead of a traditional account keeps your number lower and keeps more of your Social Security tax-free. Giving directly from a retirement account to a charity can lower it too. And the year you choose to take a large withdrawal can push you over the line or keep you under it, depending on the timing. None of that requires a new law. It requires knowing where the lines are and planning around them. Let me give you one simple picture. Imagine two retirees with the exact same amount of money. One pulls their spending money from a traditional retirement account, which counts in the formula and pushes more of their Social Security into the tax. The other pulls from a Roth, which does not count, and keeps their number under the line. Same wealth, two completely different tax bills. The difference is not luck. It is knowing the rule and using it. This is the kind of thing that pays for itself many times over, and it is exactly what the Quiet Rules lays out step by step. Which brings me to the only thing that actually moves a bill like this. It is not outrage. It is not a comment section. It is a phone call or a letter to your own representative with your own story attached, not a form letter. Let me explain why that matters so much. A congressional office hears from paid lobbyists all day long, people whose job is to be there. What they almost never hear is the actual retiree, the one the law is supposed to help, saying, in plain words, "This would change my life." When that call comes in, it stands out precisely because it is so rare. A sentence like this: I am 73. I worked 31 years. I am being taxed on the Social Security I already paid for. Please support the You Earned It, You Keep It Act. That sentence, from a real person who votes, carries more weight in a congressional office than almost anything else that arrives there. You do not need to be loud. You do not need to be angry. You just need to not be silent, because silence is the easiest vote a bill like this can lose. And here is why timing matters. Even the good things in a bill like this do nothing automatically. If it advances, you want to already understand how your benefit is taxed, so you can see exactly what changes the day it does. That is the same principle behind every video on this channel. The knowledge that protects you only works if you have it before you need it, not after. The Quiet Rules already holds the income lines, the tax math, and the account moves from every video I have made. And as this bill moves, that is exactly where the plain English breakdown will live too. Organized, ready before you need it. The link is in the description below. Scan the QR code on your screen right now or grab it from the pinned comment. 7 days, full refund, if it is not worth its place in your drawer. Now, your action checklist. Step 1. Find your representative. Go to Congress.gov and enter your address. It takes about a minute. Step 2. Call or email their office. Say you support the You Earned It, You Keep It Act and ask them directly to co-sponsor it or vote for it. You do not need to be an expert. The staff who answer write down what you called about. That count is what a representative sees. Step 3. Attach your own story. One honest sentence about your own work history is worth more than any form letter. Say how many years you worked. Say that you are being taxed on the benefit you earned. That is all it takes. Step 4. Look at your last tax return. Find the line where your Social Security was taxed. Now you know exactly what this bill would change for you, and you know whether the moves we talked about could lower it starting this year. Step 5. Share this video with someone you know who worked their whole life and is quietly being taxed on the benefit they earned. They are exactly who this bill was written for. Let me leave you with one last thought. For over 40 years, a line drawn in 1983 has been quietly reaching deeper into the pockets of retired people who were never supposed to be taxed at all. Most of them still do not know it is happening. You do now. And knowing is the first thing that has to happen before anything changes. A bill like this does not move because it is fair. Plenty of fair ideas die in a drawer in Washington every year. It moves when the people it was written for stop being invisible. When they call, when they write, when they say out loud, "This one matters to me." Whether this bill lives or dies comes down to whether the people it would help ever raise their voice or stay silent. You are not silent anymore. I am Kevin. Thanks for watching. Do not forget to check the quiet rules at kevinexplains.shop.